Do you want to be a millionaire? It seems to me if you open this video, the answer is yes. But are you ready to regularly invest your money, take risks and responsibilities? That's a more difficult question. Many people want to have millions on their account, but not everyone is ready to get there. A lot of people really love their jobs and specialty, but they still want money. In this video, I will tell you 3 ways to build up $1 million capital while working a job. Yes, it's really possible. So be sure to watch this video to the end. And don't forget to subscribe, because there are more interesting and useful videos on our channel. One of the main reasons why people fail to achieve wealth is their wrong thinking. Most are convinced that the ordinary person is not capable of becoming a millionaire. However, in most cases, wealth people are not only celebrities and top managers with impressive incomes. An entrepreneur, a programmer, an architect, and any other professional can become a millionaire. So regardless of your profession, you can succeed. The first and probably the most obvious way to accumulate $1 million capital is investing in the stock market. The most important step to become rich and creating wealth is to start investing your money. Everyone who wants to start investing should realize that the earlier they start, the better it's gonna be. Let's look at one example to see why this is so. Imagine you have $1,500 and 2 options on how to spend it. The first option is to buy a new iPhone for personal use. The second option is to put money into securities, which basically means to invest it. What will each of these ways give you in the short and long-term perspective? If the phone is purchased not for work purpose, but solely for personal use, then for a certain period of time, you are likely to feel satisfied with the new camera, screen, and very novelty of the purchase. However, with the time, you will get used to this and this gadget will become just common, slowly losing its relevance and functionality. In the long run, the phone will lose its value and will no longer fulfill its functions. If you decide to invest this amount in securities with yield of 10% per annum, then in 5 years you will have $2,415. That is an increase of 61%. And in 20 years your $1,500 could turn into $10,091. Why such numbers? The answer is in the magic of compound interest that investors love so much. If you receive 10% of your investment in the first year, in the second year you will already receive 10% of the original amount, and the 10% you receive in the first year. If you choose the first pass, it would take you a long while you receive the $1,550,000 you spent. The second pass allows you to not only save capital, but also increase it. Therefore, it is important to take the first step as early as possible to maximize your potential profit. Stock market investments are investing in stocks, bonds, and the like. Investing is a complex but highly promising way to increase your capital. There are 2 main ways to make money in this field. The first is to earn income from dividends. Dividends are regular payments that companies distribute to their shareholders as the reward for their investment. This can be a stable source of passive income, especially if you own shares in companies that have a long history of paying dividends. These companies usually operate in major industries and have a strong financial position. This allows them to distribute a portion of their profit to shareholders. Dividends are an attractive way to generate a stable income without having to sell assets. The second way to profit on investments is trading. Let's say you bought a stock in May in $20 and sold it in August for $40. So the idea is to buy securities at a low prices when the market or a particular asset is undervaluable, and sell them when the price rises. But you need to be able to analyze the market, predict future price movements, and make decisions based on those predictions. An important aspect of this strategy is patience and the ability to wait for the right time to sell. This approach can generate significant profits, but it also comes with a high level of risk. After all, asset values may not rise to expected levels, and in some cases may even fall. Both approaches have their benefits and risks, and the choice between them depends on the investor preferences and their goals. Dividends offer stability and predictability, and trading offers the opportunity of greater returns, but needs a deep understanding of the market and the willingness to deal with uncertainty. The key thing to remember is that it is indeed possible to make money on investments, but there is a risk of losing everything. Securities are not insured, so an investor runs the risk of losing all their capital. For example, the company released that shares goes bankrupt, but simply saving money can also lead to losses. The money can become worthless due to inflation. With investments, you can become a millionaire. It won't happen immediately, but the harder you work to achieve your goal, the sooner it will become a reality. And the earlier you start investing, the more noticeable will be the benefits of the power of compound invests. This path will be long, but you will definitely be satisfied with where it will take you. The second way is to get a high position at work. It may seem at first glance that making millions at work is impossible, but believe me, it is actually quite realistic. You can become a highly qualified specialist and take a leadership position in a large company. In this case, it's quite possible to get hundreds of thousands of dollars a year, and it's not far from $1 million. You can negotiate a higher salary. For that, learn how to negotiate your salary effectively and get paid what you truly deserve. A low salary at your current stage does not mean you are stuck at the level forever. To increase your income, the most obvious way is to talk to your manager about the possibility of pay raise. Prepare for the conversation by collecting information about your achievements, performances, and how you bring value to the company. If your current opportunities for salary increases are limited, consider moving into similar position at other companies where you may be better compensated. To successfully increase your income, it is important to research the labor market and find out how much professionals in similar position in your industry make. Talk to recruiters, use online resources and salary compare platforms. This will help you understand what salary ranges exist and what you should be looking for. This knowledge will help you justify demanding a high salary and prove your expectations to employers. It is also worth reviewing your salary regularly so that it doesn't stay at the same level for many years. Continually aiming to improve your financial circumstances will help you keep you motivated, and it will also provide extra money that you can put towards investments and other financial goals. In addition, it is important to never stop learning. Studying should not end once you get your diploma. Constant desire for self-improvement is the key to a successful career. Continuing educational courses, seminars, and trainings will help you to stay up to date on the latest trends in your field and will open up new career opportunities. This will help you to remain an in-demand professional in your labor market. And the third way to make $1 million is buying real estate. Investing in property has long been one of the most popular and reliable ways to generate a stable income. When you already have some capital, you can buy an apartment or a house. One of the most attractive aspects is the real estate can generate passive income in the form of rent. Also, an apartment or house can act as the long-term asset that will increase in value over time. The method is as simple as just possible. You buy a real estate and rent it out. The renter's paying a monthly fee that actually covers your cost related to maintain the property. This creates a stable cash flow that can be used both for personal use and for reinvestment in other properties. In addition, real estate often increases in value, especially in prestigious neighborhoods or where there is a high demand for housing. This makes it possible to sell the property at the higher price in the future. Rental income can vary greatly depending on the few factors including the location, size, condition, and the type of property. Let me give you an example. Let's take an average rental yield of 12% per annum on the value of the property. That means you can make about $24,000 a year in initial investment of $200,000. That is, it is about $2,000 a month. If you take into account that over time you can buy several such objects, your total year income can be more than $100,000. It is clear that it will take time and money, but then you will have a pleasant result. To start investing in real estate, first of all, you need to accumulate the startup capital to buy a first apartment or house. It could be a mortgage loan if your own funds are not enough. It is important to carefully study the market and choose an object that has a high potential for renting out. This means that you should pay attention to location, infrastructure, availability of public transport, as well as the forecast of real estate price growth in the selected region. Consulting with experienced realtors or investment advisors can help you make the right decisions. In the long run, buying and renting out multiple properties can increase your capital significantly, up to and including achieving millionaire status. You can become a millionaire while working a job. The key is to get started. Even $100 can turn into $100,000 in the future. I hope you found it useful and interesting. Go to our channel and watch more videos about cryptocurrency, finance, and earnings. Put a like and subscribe. Token team was with you, and we'll see you in the next video.